morning. Tom DeLuca, founder and CEO of A&P Credit Technologies. You may have seen some of these slides already. I'm here specifically to speak to the banks in the audience. Indeed, banks are in trouble, if we wish to use that, but I'm here to help you related to your small business lending activities. A little bit quickly about who we are. Founded in 2009, from Hong Kong, moved into the UK market 2013, recognized for thought leadership in creative modeling and innovation for small business lending activities. I'm proud to say that we're a founding member of the G20's work group on small business finance called the SME Finance Forum. In fact, I sit on the advisory board as one of the few private sector representatives. Our focus for the banks in this market is to help you focus on your core strategy, whatever your number one target from a strategic standpoint is relative to your small business efforts, whether it's increasing profitability this year, improving efficiency of the workflow, expanding your product scope to try new ways of doing business with your customers, reducing risk on your portfolio, or indeed just lowering costs in the manner in which you process applications. Whichever of those, or all of those, being your priorities, we have solutions to help you do that. Now, indeed, banks are in trouble, but we think that's rather unfair, and we're here to help you. Banks, contrary to popular belief, actually want to lend to small businesses. The governments are pushing them to do it. The press is pushing them to do it. Banks are keen to do it because they recognize small business lending as one of the few areas left, certainly on the retail side of the world, where there's good opportunity for margins, good opportunities for cross-selling, good opportunities to promote a broader macroeconomic perspective, given the impact that small businesses have on the economies. A&P is here to help with that, and we have a solution, our Kairos platform, Credit Analysis, Information, and Risk Operations System, which is also a play on the Greek word, a Greek god for weights and measures. And we offer a scalable, modular solution to allow banks to automate and improve their small business lending workflows. We have a series of modules. You can plug and play with any or all of them to offer straight-through solutions. So omni-channel onboarding. So we saw Laura talk about the Barclays mobile app and how 6 screens can give you an instant approval and funding into the account. So we could offer that. I wish I could take credit for the Barclays one, but Laura, if you're here, we're going to have a chat. Hopefully we could sell you something. But we can enable that for other banks. Omnichannel also means a web application. It also means paper, because still, for all the talk about millennials, the banking world is awash in paper. Paper for KYC, paper for anti-money laundering, paper for bank statement information, the capacity decisioning. So how do you actually start with an online application and then go into your bank branch and present the paper? Or have a sales rep come out to the small business, because small business owners are busy. They don't have time to go to the bank branch. So often, many of the banks, I believe, will send representatives out to the small business office and do an application right there. We take information and help capture it from the most convenient source. Now, what's essential here is that banks are actually pretty good at credit assessment. I'm not trying to tell you how to do your credit decisioning, but rather, given the scorecard methodology that you employ, how can we optimize the capture of that during the origination process? How do we capture information, whether it's from an online accounting platform, integration to a government database to expedite the KYC underwriting you may do? Whatever the information is that you've decided you need to populate your scorecard, we will help you capture it in the customer journey in the most convenient way possible. Putting it together into the SME credit assessment, employing the rules that you as the bank have decided that you want done, we will produce the scorecard, produce the decisioning for your loan officers. It could be auto-approved if those are the rules that you wish, or it could be kicked up to the various loan officers based upon the decisioning prioritization that you have in your company. On the assumption that you've approved the loan, now you could finally close the sale. So what we want to do is create the documents straight away. And with our automatic loan documentation module, we'll create the documents immediately, feeding all the pertinent information into templates created by your legal department, which could be emailed directly to the customer, printed out on their mobile app, signed electronically to the extent that the jurisdiction permits electronic signatures. So instantly closing the sale that you've worked so hard to do. Now, those of us in the lending business know that the easiest part is pushing the money out. The hard part, of course, is getting paid back. And in that regard, our portfolio servicing modules are very powerful tools to make it easy and convenient for customers to repay, automating debits, automated reminders, working with the small business to improve the cash flows of their repayments. If you are a small business, when we talked about some of the cash flow challenges that small businesses have, oftentimes your loan repayment could be one of those systemic crises that you have at the end of the month. Well, what if we could smooth that loan repayment for you by weekly repayments or by monthly repayments or indeed banking daily repayments? Whatever the product set is that you as a bank wish to do, we can help expedite that. And of course, when you're sitting in the cash flow behavior of that model, you could do advanced risk management, identifying customer problems before they get too big, helping the customer get back onto a good repayment plan, and of course, minimizing your risk of loss on the portfolio. A couple of examples of solutions we've solved. So really, taking these technologies, when you think about it from the bank perspective, what's my problem? What am I trying to solve? Well, a couple of different ones I could speak of. There's a bank in this region that we're working with, I would imagine probably pretty typical of some of the banks in the room. They have a typical workflow for a small business loan application of roughly 45 days from the time the application starts to the time of disbursement. And I think that's probably pretty typical. There's roughly 12 legacy infrastructure systems that are involved in that decision, oftentimes with manual intervention pushing information from one of those systems to the next before a decision can be made. Working with AMP, we've automated a straight-through process that could drop time to approval, time to submission, and time to disbursement down to within 1 day, if that's what the bank wishes to do for a particular loan. Another situation, different credit product, a card issuer with whom we're working, has a model today where you could apply online, and it seems like a very digital experience. You could upload your identification, KYC documentation. You could upload your income verification documents, your pay stubs, your bank statements. But actually what this organization does is transfer those PDF files into an outsourced center, which manually reviews the information and manually keys that into a system with a 3-day turnaround for an approval. Our system will take that same information and provide a sub-60-second approval or decision. Sub-60 seconds from a 3 banking day for the same information. Just one last example would be a bank that we're working with in the UK, which wants to test a new small business loan proposition, in this case unsecured working capital loan. They're not sure that they want to sustain this product on a long-term basis, so they're not prepared to do the heavy integration into their own platform until they've run on it for a while. They want to run it for 6 months of a sales cycle, let the product run on a repayment basis for 6 months or more, and then they'll decide whether or not it's something they want to support. So AMP, on a white label basis, can run it soup to nuts, put them in the business of running their experiment with any number of hundreds of loans in this case at a very small cost. Now you may say, well, Tom, that's all well and good. You may know the Hong Kong market in Asia, and you may very well know the UK market, but what do you know about Serbia? What do you know about the CEE region? And I'm here to say that we are wholly committed to this region. In fact, from the UK, we've got a great platform for servicing the CEE region. We've got clients actively working in Austria and Croatia. We have our development center in Bulgaria, and we are actively here today to seek out banking opportunities in the market. So that's my pitch. Please, we're in the next room, right on the other side of this wall. Come and speak to us. Ask us, how can AMP help improve your small business lending activities? Thank you.